I'm going to give you the step-by-step strategy with a trading plan that you can use today to start find success inside the marketplace to pass any fund challenges or grow your small account. Watch till the end of this video as I not only give you the blueprint, but live executions and examples to further your learning. Before we get into the video, make sure you guys are following me on Instagram at Arkhamtrades. Thank you. The model that we're going to be going over is the inversion fair value gap model. In this first depiction here, we can clearly identify this bullish fair value gap. And as you can see, soon after creating this bullish fair value gap, we see this shift. Following that shift lower, we can see price creating a body close below that fair value gap. Following that body closing fully below that fair value gap, then turns this bullish fair value gap into an inversion fair value gap, where this previous fair value gap, which was originally supposed to hold as support for a continuation higher, this is now changed to a resistance level to hold and reverse lower. And then vice versa for a bullish inversion fair value gap, where in this depiction we can see price making lower and lower prices. Following those lower prices, we see a break to the upside, closing above this bearish fair value gap here, which that bearish fair value gap then becomes an inversion fair value gap, which price comes back into that same level to then offer support for a reversal move to the upside. Before we can take a trade inside of inversion fair value gaps, we have to be aware of overall context. Looking at the same depictions here, we can identify this higher time frame PD array or this liquidity pool as our point of interest. And as you can see, price came higher into that point of interest. Following tapping into that point of interest, we could not push any higher, and then we started seeing this push to the downside, creating this then inversion fair value gap to where we come back up into for this drop to the downside. And as we can see here in this bullish example, we came lower initially, tapping into that point of interest, which was that higher time frame PD array or liquidity pool. Following tapping into that level, we see this reversal to the upside, breaking above this previous bearish fair value gap to then offer support for a continuation to the upside. Just like so, a inversion fair value gap, there has to be context behind it. There has to be a specific narrative for why the marketplace should reverse, right? Why is the marketplace reversing? Did we tap into a level of inefficiency like a fair value gap, order block, or did we take out liquidity inside the marketplace for the marketplace to reverse? Because this is a reversal model. And once we can identify that reversal followed by this breaker structure to the upside, is when we can then get our confirmation, and this inversion fair value gap is our entry model for that reversal move. Now let's get into the trading plan, and this is your cheat sheet to follow on a day-by-day basis to find success with the inversion fair value gap model. First, we want to be trading these pairs, specifically indexes, which consists of the Dow Jones 30, the Nasdaq 100, and the S&P 500. Indexes are very popular when it comes to trading the inversion fair value gap model, because they are volatile pairs and tends to offer reversal signatures the most, which is perfect for this reversal strategy. Next, we want to be focusing on time, which is 8:30 to 11 a.m. EST. This is the time window we want to be focusing on a day-by-day basis. This is the New York session open for the index markets, and this specific time during the day tends to offer the most volatility. Then we want to be focusing on these time frames, the H4 and the H1 being our higher time frames, and the M15 and M5 being our lower time frames. After we have that out the way, the first step is to identify our higher time frame PD arrays. This can be fair value gaps, order blocks, breaker blocks, or rejection blocks inside the marketplace. These are our points of interest. Then we want to be identifying our liquidity pools. This can be prior daily highs and prior daily lows, prior session highs and prior session lows, old highs and old lows, all inside of the marketplace. After identifying our areas of liquidity and inefficiencies during our kill zone time, we want to wait for price to tap into those points of interest, for then we can look for a reversal signature. After price taps into our specific points of interest during our New York session kill zone, we want to be going down into the lower time frames, and we want to identify a lower time frame breaker structure. Essentially, let's say we have a bullish fair value gap, price comes lower into that bullish fair value gap during our New York session kill zone. We want to go down to a lower time frame, either the M15 or the M5. Then we want to identify a M15 breaker structure to the upside, signaling that price has found support at that bullish fair value gap to where we can see that reversal signature. Right, as we can see here, let's say in this depiction, we have this bullish fair value gap below us. Price comes lower, 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 taps into that bullish fair value gap, Then we want to go on to lower time frames and identify a break away from it, and that would then be our confirmation that price has found support at this level, and we could potentially see a reversal here. Following that confirmation, we want to identify, is there an inversion fair value gap? So as we can see here, this was the bullish fair value gap. Price came lower, lower, tapping into that bullish fair value gap. We went to lower time frames, identify this breaker structure to the upside. Following that breaker structure to the upside, we create this bullish inversion fair value gap. So now we want to anticipate price to come back down into this bullish fair value gap to then take the reversal move. And then last but not least, wait for price to come into that inversion fair value gap, take the trade idea, aiming for at least a 2-to-1 R, targeting opposing liquidity. So as we can see here, we can put our entry as price taps into that inversion fair value gap, stop loss below the fair value gap low, targeting opposing liquidity like previous highs, old lows, for at least a 2-to-1 R. Last but not least, wait for price to come into that inversion fair value gap level to then take the trade idea, aiming for at least a 2-to-1 R, targeting opposing liquidity. Now that we have the framework out the way as well as the trading plan, let's get into the charts and show you guys some live examples of this in action. Before we continue, if you guys are looking to join my private mentorship, this gives you benefits like live trading, pre-market analysis, and post-market analysis with me every single day, as well as access to my Market Maker series and Market Maker Mastery course with full in-depth guides on everything when it comes to ICT and SMC, shared nowhere else. That's going to be the first link in the description if you guys wish to join. Back to the video. For our first example, this was a live trade that I did call live with my private mentorship students, which netted us a little over 4-to-1 R. So we're on the 1 hour time frame here looking at the Dow Jones, and obviously we can identify this area of liquidity, which was this May 24th Friday London close high, as well as we can identify this 1 hour bearish fair value gap as our points of interest. So coming into marketplace here, we have our points of interest. This is a massive resistance level inside the marketplace. If we can come up into this level and see some type of rejection, we want to look for the inversion fair value gap signature to then take the marketplace lower back below these lows. Let's go down to a 15-minute time frame and get more context. We're down on the 15-minute time frame here, and let's see what happens as we reach up into this bearish resistance level. As you can see on the 15-minute time frame, we had this push to the upside coming into the equities open into that point of interest. As you can see here, price could not hold at these higher levels. Sellers started coming in. Following this drop to the downside, let's go down to a 5-minute time frame and see if we can get some type of inversion. And just like that, perfect, we have this inversion fair value gap right here. This was the bullish fair value gap, which pushed up into this point of interest, which was that 1 hour bearish fair value gap, as well as this area of liquidity. And then we have this body closing in this fair value gap. So then this becomes the inversion. So if we can see the marketplace come back up into this inversion fair value gap, we can then take our short, anticipating a continuation to the downside. So I'm going to put my entry here at the opening. Stop loss just back above the inversion fair value gap high, targeting back below this low for a 2-to-1 R. Let's see how this plays out. We can see price comes into that inversion fair value gap. Then as we can see here, we do create this bearish fair value gap here. So as we create this bearish fair value gap, after tapping into that inversion fair value gap, I can scale into my position and move my stop loss back above this high, targeting below lower prices. Scaling into this position means that I make more on this swing trade. I already got confirmation that price has tapped into this inversion fair value gap and then left it. So I have confirmation that price is going lower, meaning there's no reason for price to want to come back up into these highs, right? We've already made that reversal, signaling that we're going to continue lower. So if we can come back into this fair value gap level, I can scale in and add to my winning position, targeting back below the lower prices. So instead of making a 2-to-1 R on this trade, I can make a 3-to-1 R, right? This is the power of scaling in, and why it's important to scale in once you gain confirmation and you gain additional entries. Let's see what happens. Price comes into that bearish fair value gap, and then we see the push to the downside down below these lows. Very solid. For our next example, we're looking at the Nasdaq on the 4-hour time frame, and we can clearly identify this bullish order block as a level of support that we could potentially see the marketplace reach down into to then potentially see higher prices. Let's go down to H1 time frame. As well as on the H1 time frame, we do have this level of liquidity by these equal lows. As you can see, these equal lows here as areas of liquidity. Go down to a 15-minute time frame and see what happens. We're down on the 15-minute time frame here, and we're coming into that 8:30 morning open. So let's see how the marketplace reacts after tapping into these levels of support as well as taking out this liquidity pool. We can see price coming lower, tapping into that 4-hour order block level, as well as taking liquidity. Let's go down to 5 minute. On this 5-minute time frame here, we can see that we have this bullish close higher back above this bearish candlestick. Right here, we don't see an inversion fair value gap. So when we don't see an inversion fair value gap on the 5 minute, we can go down to the 1 minute, because I'm sure during this bearish move lower, there has to be a fair value gap. And if we see this push to the upside, breaking back above this bearish move lower, then there is an inversion fair value gap here. So let's go down to a 1 minute. Now we're down on the 1 minute time frame, and we can clearly identify this bearish fair value gap, pushing lower prices, tapping into that 4-hour order block level, following this breaker structure to the upside. So we have this inversion fair value gap here. I want to put my entry here at the opening of that inversion fair value gap here. Stop loss below this low right here, targeting back above these highs for a 2-to-1 R. Let's see how this then plays out. Price comes lower, tags us into our trade idea. And then we see this push the upside back above these highs for a 2-to-1 R. Very, very solid. On to the next example. We're looking at the S&P 500 and we're on the 1-hour time frame. Clearly we can identify this level of liquidity, which is this prior daily low, as well as we can identify this liquidity void. Right, when we have liquidity voids inside of the marketplace, we can anchor that 50%, and that 50% tends to be a support level. So that's just a quick tip for you guys. So we have the 50% of this liquidity void inside the marketplace, as well as we have taken out the prior day lows. This is obviously a level of support inside the marketplace. So if we can see a lower time frame break away from this level, then that could signal that we could see an inversion take place, and we could potentially see a reversal back above these highs. Let's go down to 50-minute time frame for additional context. And then now coming down into the 15-minute time frame, we can clearly identify this inversion fair value gap here. We have this inversion fair value gap just before the 8:30 opening. As you can see, price came lower, tapped into that 50% of the liquidity void, as well as taking out the prior daily lows, following this break to the upside, breaking back above this bearish fair value gap. So I'm going to put my entry here at the opening of this inversion fair value gap. Stop loss just below this low, targeting back higher prices for a 2-to-1 R. Let's see how this then plays out. Price comes lower, taps us into our trade idea. And then price eventually reaches up into that level, just like so. Very, very solid. I do put a lot of effort into these videos, so if you guys want to support me further, make sure you guys hit that like button, subscribe if you haven't already, as well as comment what you guys want to see next, and I'll make a video on it, or comment if you guys have any questions or need some help. I'm Arkham. Be safe.